We're going to do a quick concept check here on the RSI, also known as the Relative Strength Indicator. It was developed by a gentleman named Wells Wilder and was first published in Stocks and Commodities Magazine back in 1978. And it's been a very, very popular oscillating indicator for many, many, many years now. And it has some pretty good uses. There's a couple of things that we really look for in the RSI. So I've got a chart of Facebook open. I'm going to look at a couple different stocks and just show you a couple of different examples of how an oscillating indicator like this works. And it serves a couple of functions. One of the things that'll help us identify is when a stock is overbought, meaning prices have run too high in the short term, and oversold when prices have run too low. And there's a couple of good examples of that right here where you can see the RSI poke up over 70, indicating overbought, and you can see a couple of spots where it drops down below 30, indicating oversold. And if you look at what happens, you see, that it reverts to the mean. When you see things get overextended, you'll see a revision to the mean, back down, and again back up. So very, very common to see a revision to the mean on stocks as they oscillate. And again, as prices drop and rise and drop and rise, that RSI indicator is going to oscillate with price. And again, there's, the default setting on this is set to 14 days, which goes back to the original article that Wells Wilder suggested, a 14-day setting. But there are other popular settings. 20 days would match a month, and 10 days would match a swing cycle. And one of the things we watch out for, in addition to overbought and oversold, is what is called oscillator divergence. So here's a really good example of oscillator divergence. The stock price dropped and made a lower low, and you'll actually notice that the oscillator went higher even though the stock went lower. So I'm going to highlight that one more time. Lower low here, and then higher low on the oscillator. And when you see that, that's a good indication of slowing momentum. So on this chart, we see one right here where the price rose and hit that, and then it rose into a next cycle. And when it registered on the RSI, it registered a little bit weaker. And that's actually typically caused by what we call slowing momentum, or the size of the run. The first run was bigger than the size of the second run, and that slowing momentum will lead to oscillator divergence. You'll see that again on the bottoms right here where it dropped a lot and it dropped less. And even though technically it went lower, here you'll see it register higher. So those are some of the things we look for. Now, as a measure of strength indication, let's take a look at, I'm going to switch gears to a different stock, AT&T here, where the stock is breaking out. And I want to point out a previous potential breakout right here, where the stock price came right up into resistance. And by the time it hit resistance, it had been running for a good long time, and the RSI indicator indicated that it was overextended. So again, you can see that that's a warning sign not to try to buy that breakout. Whereas now the stock price is breaking out after a consolidation, and it's not overextended. It's up here at 65, showing strength. And what we look for is over 50 strong, under 50 relative weakness, over 70 overbought, under 30 oversold. And so again, you can spot some points on the chart where oversold led to a revision of the mean. Oversold led to a revision of the mean. And there's another oscillator divergence where it crept higher even though the stock went lower. And again, pretty good little indication on the RSI. I'm going to switch gears now to a different stock. We're going to go ahead and take a look at APD, Air Products, recent candidate off of one of the scouting reports here. And we got a nice high base. And again, right now the RSI is above 50, showing strength, but again, not overbought, leading to a breakout. There is a tendency for an oscillator to get stuck in overbought mode when you get a strong upward drift in the trend, and it can ride that upper line for a long period of time. That's one of the flaws of an oscillating indicator. Sometimes when you get strong trends, it just gets stuck up in an upper range, or in a lower range. When you go look at something in a downtrend, we can go switch gears and look at something that's been in an extended downtrend. Apache comes to mind, and you'll see where, again, you can see it kind of riding that lower band as the stock continues to make lower lows. And not an uncommon scenario when you're looking at stocks that have been in extended downward runs, like here on GE. You can see again extended downward run, and it really rode that lower band for a while. But you still see an oscillator divergence here as the momentum slowed down. The oscillator diverged. So those are a couple of indications for us, things that we can look at. And again, recent candidate on the scouting report, RSG, showing a nice little cup and handle up here. RSI reading at 59. And again, a couple of points on the chart where you see oversold and overbought that kind of warn you when you're overheated. Here's a breakout that didn't quite take off very well. It was kind of a weak breakout. And again, here another area where it was a little overextended. But as you're coming into a breakout, one of the things you're going to look for is over 50, under 70 for bullish breakouts. Watch out for oscillator divergence on the top when you see slowing momentum. Hopefully this has been a helpful little concept check for you on the RSI indicator. And again, we'll make more videos like this for you to go along with the step system training. And of course, if you're not already a member of Tackle Trading, come check us out.